Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Scouten. Jumping into the charts on this December 29th, so it is the second last day of the trading year of 2022. And my oh my, has it been fantastic for our trades and profits this year. Basically, we're looking to close this year out on a pretty high note, a very strong note. Today we took profits on our Tesla. Beautiful job that those that took the trade with us. You can clearly see the magnificent technical bounce that Tesla's got off of these two parallel channels over here. What an epic bounce. If you actually look on the weekly chart, Tesla's put in a little bit of a weekly bottoming tail now. Now there is still, yes, tomorrow's price action. So this weekly bottoming tail has not closed yet, but it's looking pretty strong. Now, in my mind, one of the reasons I took profits on Tesla, basically we nailed the high here, just a pierce of that gap fill. When you have an epic move in the markets and in Tesla, you can't get greedy. Yes, I do think that there's more upside in Tesla, but there's also still a lot of sellers lurking. One of the things that I observed was the volume. Yet again, a massive amount of volume, which means that yes, there were a great amount of buyers, but there were still people selling as well. So perhaps we can get a retrace on Tesla to fill this gap to the downside. That's one of the reasons I did not hold our Teslas, because you did create a pretty enormous gap to the downside. And then if you actually looked at it intraday, there were some distribution signals occurring. Basically, anything below this pivot over here, 117.50, would be an opportunity to continue to accumulate a long position on Tesla. One of the reasons I also wanted to exit is because we have not fulfilled the true downside of this major weekly topping formation that Tesla triggered. So perhaps we should see maybe another flush down on Tesla, but it does give us the opportunity to free up cash and buy it if it does come to fill this gap down below. So that's kind of my expectations for Tesla. If you're still holding it, basically the max upside target that I would have sold the full position is at 137. There is the potential that it could come all the way up to 149 or even these pivots, but obviously that would take an incredible market bounce, and I just don't think we have that right now, considering that I also see distribution or accumulation occurring in the dollar. So we've been discussing the dollar, and if it wasn't for today's jobs data coming in line with market expectations, I think we would have seen the dollar break out. But I do think, considering that even though we got a pretty muted initial job loss claims, which came in line with expectations, the fact that the dollar had a big sell, took out this wick low, but managed to rally off the lows, shows that there is accumulation, which is why we are going along the dollar and starting to park some cash in the UUP. So if you look at the UUP, we pretty much picked the low on the UUP. Let me just type that in again. UUP is just an ETF for the dollar. So basically we bought the UUP, let me just do that, 27.88. So it's slightly up from where we bought. But needless to say, if you look at the intraday dollar and why I think we're going to get a bounce, sorry, let's just look at the weekly. The weekly dollar, you still have this beautiful weekly bottoming tail in effect, and you have not negated that low. And typically when you get 2 weeks of a retrace inside of that weekly bottoming tail, that means that you're likely to see continued upside, because in the last 2 weeks, you have failed to take out this weekly reversal signal, despite we've had pretty good economic data in favor for a dollar heading down. And if you look on the hourly chart for the dollar, whenever you start seeing wicks like this, wicks over here, wick, tons and tons of wicks, pretty much all in the same range, that is showing accumulation. Someone or big funds are accumulating the dollar. Potentially there's some sort of a fear-based event that's going to occur. Potentially yields are going to continue to rally. But I do think the dollar hasn't had a meaningful technical bounce off of this major level. I mean, even if we look at the chart here, when you have a 2016 pivot, an initial breakout zone, and you've come into it on a pretty hard sell, you typically get a pretty big meaningful retrace on the US dollar, and that's kind of my expectations. Now, if we look at the S&P 500, the S&P 500 is really intriguing. First off, if we look at the daily chart, we can see that we created another gap to the downside. So now you have 1, 2, 3 major gaps to the downside. If you know anything about gaps, they have a 90% chance of being filled, and an even higher chance of being filled if the major trend is in the direction of the gaps. So considering you still have 1, 2 gaps to the upside, but 3 gaps to the downside. And when you factor in that the trend is making a series of higher lows, which is a downtrend, it does favor that we do see a move down to fill these gaps sooner rather than later. Now, the interesting thing about the fact that we do think there's downside in these markets, if you look on the daily chart, this is somewhat bearish wedge consolidation. You can clearly see that you have a little bit of resistance here, and you have arguably some resistance over here. So you can see that this is a bearish wedge that is forming, which does favor an eventual move down. However, what I want to bring to your attention, if we look on the hourly chart, what I want to bring to your attention is potentially a bullish pattern, this inverse head and shoulders. So this inverse head and shoulders on the hourly has actually triggered today with today's up move. You confirmed on the hourly chart, this is your neckline, which you broke through and confirmed, and now you're putting in consolidation. You also confirmed on the 2-hour, but you haven't confirmed on the 4-hour yet. I typically like to see intraday patterns confirm on the 4-hour chart because it mixes in that longer term time frame but the shorter term time frame as well. So assuming that this pattern is valid, this basically takes you a move all the way up to about this just under 4,000, 3950, just over 3950, which is about a 2.5% move in the S&P 500. Now, with this pattern, we have to keep in mind that today's session happened on extremely light volume, 66 million shares. So I like to really pay attention to the volume trends because it really puts into validity the probabilities of a pattern. I typically don't like to treat patterns as strongly or with the highest degree of probability when you have it on a light volume session, and that's typically what we have seen over the last couple sessions. Now, there is a chance that we see some more tax loss selling, but if we don't and there's no more tax loss selling, if you get a retrace back to this trend line there, which is the breakout zone, you could play it for a bounce up all the way to this area. Now, we have to keep in mind that considering we are bullish on the dollar, since we're accumulating a dollar position, the UUP, this pattern, it is bullish now, but if it breaks, that means it's a failed bullish pattern and these markets will see a lot more downside. So I never like to see these gap ups on light volume because typically they do fail. But we just have to keep in mind there is potentially a bullish pattern at play here, and we'll just have to wait and see what type of retrace we get to this zone, if it slices through or if you actually look to have a meaningful bounce and take out these highs again. That's kind of my expectations for the S&P. I don't think we're going to really do much tomorrow. I think we may just chop. Perhaps we go up to fill this gap around 38.77, but I really don't expect much higher than this 50 daily moving average tomorrow, considering we did have a pretty powerful move today. Taking a look at oil, oil had a little bit of a down day today, but pretty much closing up flat on the session. Basically, it was down, trading all the way down here at 676.85 until the EIA inventories came out, which pushed oil up. Obviously, with the price action, the drawdown was probably much larger than expected, leaving the reserves and inventories a little bit lower than anticipated based off of oil rallying off of that news. Let's take a look at natural gas. Natural gas is extremely interesting. Obviously, you all got the trade signal today via the alert. So we are long natural gas. Basically, one of the reasons why I wanted to go long natural gas is if you simply look at the natural gas chart, natural gas has had an epic sell-off from about $7 all the way down to about $4.30 and change, or $4.40, sorry. And one of the reasons I issued the trade signal is you have a couple factors here. You have a beautiful oversold condition in the short term. You also have this symmetrical channel, which you've hit basically to a T, and you also hit it or just missed it yesterday, but there was accumulation that was shown yesterday off of that level. And then with today's initial sell-off, I thought it was a great opportunity to get in because it did show that there were buyers yesterday, and now there were also buyers there off of that level today when you did hit it. Not only on the daily chart do you have some technical support here, but if you look on the monthly chart, we tagged the 200 monthly moving average to a T. And you also have this beautiful chop over here, massive consolidation range over here before breaking down, and you have a beautiful, beautiful support zone over here which actually checked back and then broke out. So tons and tons of support. Even if natural gas goes lower, we have a major pivot over here from 2016 at 416, and then you also have the 50 monthly moving edge for 378. So it's just a starter position for us, but I do think that we could see a retrace back to these pivots over here. This will be your clear resistance. A retrace back to the breakdown zone is very, very likely. Typically when you have a big pattern breaking down, which we have, you see a lot of people piling in on the short side, and then the markets love to rip that price action back up, spooking out those shorts, and then they eventually take it back down once most of those shorts are out. So being long at these levels, I do think provides a pretty good risk to reward ratio, being the fact that natural gas is at technical support and monthly support. I love when levels hit monthly support. Let me just see if there's anything else I can touch base on. Oh yeah, congrats on the Tesla, congrats on the Generac. We sold this position. Look at this beautiful 2-bar surge into the 50-day moving average. We sold that for about a 10% gain. So awesome job on that. Let's take a look at the US 2-year yield. So the US 2-year yield was slowly trying to creep up today. Basically what you're doing here on the US 2-year yield is you're putting in maybe some potential bullish consolidation. A few more sideways days of consolidation does favor a move up, probably to this next zone of 4.48%, which would imply that the Fed probably needs to hike another 0.25%. Basically, the Fed has still been saying they're going to take the terminal rate up to 5.15, which means that you should see this 2-year yield eventually go up if that is the case. Let's take a look at the long end yields. The long end yields are taking a little bit of a breather today, which was anticipated. That's kind of why we picked up UBT yesterday, but you can see a beautiful pullback here. Now, this is actually a healthy pullback for yields. What you want to see is yields consolidate above these 2 red trend lines over here. If yields can chop and consolidate, it does favor a retrace back to this orange trend line, and that typically will mean that the markets will see downside. I still think that it's a likely scenario we fill this gap to the upside, which was just missed by a few pennies. That's why I do think that there's more upside in yields to come, which I have no problems with because I do want to accumulate a larger bond position via the UBT. Really, there's nothing else. I could touch base on Bitcoin and some crypto. Let's just look at Bitcoin, shall we? So Bitcoin basically has broken down from this bullish consolidation. You can see 2 hard days. Now on the intraday basis, one of the reasons Bitcoin has bounced here is you have a beautiful symmetrical channel connecting pivot to pivot to pivot to pivot, but you are starting to roll over. My thesis for Bitcoin still hasn't changed. We are short Bitcoin right over here, so we have not basically change our thesis. We still think Bitcoin's heading much lower. Next stop for Bitcoin, if we basically take out this channel, I think are these this double triple bottom zone over here around 1564. If we break that, and I do think we will break that, then it's really the floodgates open for Bitcoin. Taking a look at Uniswap is the other one that we're shorting. Uniswap's actually one of my favorite crypto shorts right now. One of the reasons being is you have this beautiful wedge pattern, which you can see the upsloping resistance trend line, and this, downsloping resistance, upsloping resistance, and you've broken out of that wedge. Now you haven't confirmed a breakout of that wedge, but being the fact that you got a retrace off of today's market strength and then a clear reversal back down, giving up all those gains, is extremely bearish, and it does favor that we likely see confirmation to the downside fairly soon. We are short Uniswap right around here, 563, so we are in the money substantially. We're double-digit gain already, but I think this has a lot more downside. You've honestly triggered a massive topping formation on Uniswap, which takes you to about 257. Will I play it all the way down to 260? Probably not, but we will certainly, it's looking very likely that we're going to be seeing profits. And if you simply look at Uniswap here, this is the key trend line. This was its original trend, basically major pivot to major pivot low in June, which you've actually triggered and broken. So you've had now 3 weeks trading under that resistance trend line, and the longer and longer you trade under that trend line, the more vulnerable it is to a larger move down. You know, we haven't really seen a large drawdown like this magnitude or this magnitude on Uniswap. It's really been in this sideways range, working itself lower and lower, but I do think that we're very close to a potential freak out in crypto again, where we could see the markets sell off a lot harder. And one of the sentiment gauges, one of the things that I think of is when you start seeing MicroStrategy announcing more buys to the public, many people think that's bullish, but I'm kind of on that counter trend play where when they're announcing those buys, and their average is still sitting at 30,000, despite Bitcoin being at 16 or 16.5, in my mind, there's a lot more downside to come. And when they're buying here, that just only re-enthuses me that there's going to be more downside, because typically the market knows better. And when you are the largest accumulator of Bitcoin and you believe in the asset so much, and that you really only have one thesis when it comes to Bitcoin, which is going long, typically you're wrong. That's just how the markets work. Generally, when you're the largest crypto holder or publicly traded company being the largest crypto holder, the market is going to be gunning for you and they want to see you break. And that's kind of been my whole thesis, is I think we're going to go down to that level, that 3,500 in Bitcoin, which is kind of the liquidation point, I believe, for MicroStrategy. I think it's around 37 or 3,500 or 3,300. In and around that 3,000 range, I believe, is where the liquidation point would have to be for MicroStrategy, meaning that they don't go under as a company, but they would have to start selling Bitcoin to meet margin calls. So that's kind of my expectations for Bitcoin. Even if we look at ETH shows a little bit more better relative strength, but again, you have this beautiful upsloping wedge pattern, which is extremely bearish. You can see this flat top resistance, upsloping trend. You're approaching the apex of the triangle inside of a bigger bear flag, inside of an even bigger bear flag, inside of an even bigger bearish wedge. So I think Bitcoin or Ethereum is also on borrowed time. I do think that we're going to see a sharper move down in the whole crypto space sooner rather than later, and it's only a moment of time. Now, one of the things that make me skeptical about this rally is when you see commodities down like lumber and copper, even when the dollar's down, that's signaling to me that there's still a great weakness in the economy, i.e. the housing market, and copper, also the housing market. And when you look at copper's price action, copper's actually putting in, it's tested the 200 once, twice, 3 times, 4 times. Basically, when you test a level 4 times and fail, the odds swing greatly in favor of a continued move down in the opposite direction. And now with this beautiful daily reversal signal on copper, and with potentially the dollar breaking out, I think that there's going to be a weakness in the commodities moving forward. And typically when copper is down on the day and lumber's down, it means the dollar is up. But when the dollar is down and both of these assets are also down, that's a little bit of a red flag in my mind. Really, that sums it up for today's video. Let's just continue to see how tomorrow progresses. Basically, there's a few trades that we're crushing it. EVGO, beautiful job on that trade. It has put in a weekly reversal signal. Potentially, tomorrow, we still have tomorrow. But look at that epic move. We're now in the money. With that ad yesterday at 3.68, it put us in the money tremendously. So awesome, awesome job there. Even some of our plays like Smith & Wesson, this is a beautiful bullish pattern over here that looks to be breaking up. So we're already in the money substantially on that trade. If you look at PayPal, PayPal is one of my favorite charts heading into the new year. With this powerful epic move, we're in the money. TDOC, so there's a ton of trades, long trades that were in the money already, and I do think that there's further upside for a lot of these trades. But we'll just have to continue to wait and see how things progress. But that's it for today's video analysis. Please give this video a like down below and stay tuned for more price action. If you're not a member yet, things will be changing in 2022. I will be looking to incorporate a little bit of paid memberships, which gives you a little bit more value in terms of building up a track record this year. I think it's been a tremendous year for everybody following the TC trade signals. So I do think that it's time that we're going to be making these memberships more exclusive to those that value all the information and insights. That being said, wonderful, wonderful job on the profits. Thank you all for being members, and stay tuned for more trading alerts tomorrow as we wrap up the investing and trading year of